The first ETF with physical uranium exposure has been listed in the US, and this is replicating what we've seen on the chart here on the left-hand side for the Toronto listed exchange for the uranium ticker U, showing that the physical uranium trust, which really replicates what the uranium price or the commodity has been doing over the weeks, months, and years, because that's what we're reflecting in this ETF. What we want to have a look at is how the uranium miners on the ASX have performed as we've seen this historical movement. The chart here shows that it has been a strong movement in the uranium price throughout May, June flatlining, coming down into July, and then falling into August, where we've seen this release. You can see that the monthly figures for the Sprott Physical Uranium Trust is not actually showing because it hasn't been listed for a month, but it is down 2.8% for the week, 3.9% for the UU in the Toronto Stock Exchange. Now, what we see in the commodity is that it's down 6.7%. And we'd expect that to show in the leading ASX listed uranium miners. We'll have a look at the top performers and then some of the favourites to see how they performed in comparison. First off, we see TIN as a ticker, TNT Mines. These are all low liquidity companies, putting on 6.45% over the month and not really reflecting too much of what that commodity does. A bit of a surge here throughout June. When we move over to number 3 for the month, we've got Maximus Resources MXR, 9.16% rise, again, not really reflecting what that commodity has been doing and not a direct or a real proxy for that price. Laramide LAM, 9.96% rise, again, very low liquidity company with many periods of not trading at all. And then EME, you've got Energy Metals EMEs, put on 13.7% to be the top performing uranium company on ASX this month, but not really much of a trading company there with very patchy trades. Now we go over and have a look to see how the top performers on the ASX over the last year or so have really performed. We've got Alligator down 34%. Bannerman Resources, BMN, we can see that that's down 25% as well. So these charts are reflecting that the downward movement we saw throughout July after the June highs, then moving into where it has been falling into August. Bannerman will expect to see a similar sort of movement there. And then we're going to have a look at Paladin as well, which is the old name from a decade ago that was the favourite trading stock for uranium. It has held up significantly better, but percentage-wise it's still reflecting a 4.3% drop on the month, while uranium itself has done 6.7%. Other companies that we've surfaced in finer market points in previous uranium episodes have shown Toro Energy as being a top performer. It's now down to where it was taking off in December and January before. So it's fell under this 200-day moving average, being the red line. And it's now, if we look at Toro Energy over the month, we can see on the table here that's down 25% as well. PN has been another top performer over this period. Peninsula Energy is following that same pattern. Although it spiked in May, it didn't follow the commodity price into June. It actually fell into June, continued July, and where it is in August, back to where it broke out in April, down 18.92% for the month, although it did start high and peak high in May. And we also see LOT, so that's Lotus Resources. They're down 6.25%, reflecting more like Paladin at 4.35% and uranium itself. Less liquid, less turnover than we do see in Paladin, but it is reflecting 6.25% drop. And then another one to round out the movements that we have seen with changes to Elevate Uranium, which was the old Marineka MEY, down 7.15%. LE8 is showing that it did peak in June like the commodity, fell back into June, the end of June, sort of flatline, but the shares have fallen throughout June, July, and then August. Bring this back up to see that parallel and how that reflects for the commodity itself. It is showing that it did take off with the commodity, but then has definitely given back a lot more than what the commodity did, in contrast to, say, Paladin, which has kind of reflected what that commodity price has done and the gains and movements. We'll continue to watch how that Sprott ETF does trade, how the performances stack up against the ASX listed miners, and surface where the top performing uranium exposures are on the ASX. If you like the video to support the channel, click subscribe for updates and comment below to let us know which uranium miners you're trading.